Good morning, and thanks so much for tuning in. This is Stocks to Watch on BloombergQuint, and I'm Alex Mathew. There could well be broad-based selling once the markets open today based on the handover from the US markets, but we're still going to narrow our conversation down in this program to three stocks that are likely to be in focus today. My guest today is Mayuresh Joshi of William O'Neill. Thanks so much for joining me, Mayuresh, and good morning to you. I want to start with Torrent Pharma, and obviously this is part of the pack that has done so well in the year so far. But let's talk about the earnings. Revenue came in, I think, slightly below estimates at just over 2,000 crore, but everything else seems to be better than estimated, right? So you have net profit at 310 crore, you have margins coming in at 31.5% versus estimates of 29.5%. And I just want to understand from you, are you positive on this counter based on the results that you've seen? And would you continue to recommend holding on? And would you get into this counter at this level?
Morning, Alex. Thanks for having me on your show. So as a disclaimer, we have suggested this stock to our clients. And we have a very strict policy, Alex, in terms of revenues and keeping our stop losses. So as a clear disclaimer, I think our stop loss is pegged exactly 100 rupees from where it is closed today. So that is something that investors need to keep in mind. Now, the logic in terms of numbers itself, the top line has been flattish. And that's primarily because of the slowdown that you've probably seen in US sales and what has happened in Brazil, one of its other geographies that it operates out of. The Indian revenues and the revenues in Germany have held up pretty well. Now, the outlook thereof, and in terms of the operational efficiencies that the company did exhibit, the margins are 31.5%. I think the average margin band has been anywhere between 28-29. So exceptional in terms of cost optimization that the company has done. And that has clearly percolated down to the bottom line. But the broad expectations are that the business back in the US with specific launches expected to come through over the next few quarters. They've got a very reasonable and decent pipeline for those launches to take place. And even the Brazilian business expected to bounce back should support the overall numbers. The Indian business is holding up pretty well, and the expectations of margin profile expected to continue along with deleveraging on the balance sheet should support the earnings story and the return ratios thereof. So yeah, I think as I clearly mentioned, I think we're very clear with our stop losses, which is 100 rupees from the current level as per the O'Neill methodology. But if the stock is able to sustain, I think if it picks up strength in terms of price, I think that is the time that investors can go out and then.
Understood. I want to shift gears, and that might be, the right way of going about it, and talk about Tata Motors. Because when I look at the domestic numbers, seemingly, at least looking at the wholesale numbers, they're looking better than a few of their peers in terms of the passenger vehicle segment. But everybody knows that when we're talking about Tata Motors, we're talking about consolidated, we're talking about Jaguar Land Rover. That's going to be the key aspect to watch for. What are you looking forward to, and are you reasonably confident that the bounce back will happen in the second quarter, or is this overarching fear of the second wave going to, play spoilsport?
So that's a large unknown, right? I think a lot of economies in Europe, in North America, will try to grapple in terms of not having a complete shutdown again. And that's what they're trying to probably do to mitigate the risk thereof. Obviously, I think the business elements and the contribution of JLR still remains extremely large in the overall cash pie or the contribution in terms of top line or revenues. Expectation largely that China has started bouncing back, and China probably seems far more resilient to the virus at this point of time. So if the Chinese sales remain very, very robust, I think that is one plus point for the stock. What happens with the European markets, the diesel commission norms that have come through, but the issues related to partial lockdown, so on and so forth, does that create a dent in terms of volume growth, specifically for the Land Rover sales? That is something to be watched out for. North America is also holding up pretty well in terms of numbers. And the own domestic business itself, the expectations of the CV cycle reviving back, they've introduced a few variants, the variants for the passenger vehicle segment as well. I think what kind of a pickup does one see because of the festive season is something to be seen. So I think the last quarter's numbers a little bit encouraging. Consistency is something that is required from an
Mm.
earnings perspective. O'Neill itself suggests that the EPS rating probably still remains a little bit weak, but the worst in terms of reported numbers is probably behind. But we'll still like to ideally watch out for how numbers play out, what's the management commentary like, and there has to be a substantial improvement in our own parameters like the EPS rating and the price rating before we re-rate the stock.
Yeah, and I would think that a lot of people would be wary having recommended it at levels of close to 300 and then seeing the stock fall all the way, lower. But having said that, let's talk about Bharti Airtel, because this is a counter I think that a lot of people have felt that has been a little bit unfairly treated since the lower levels that we've seen over the past month and a half, 2 months or so. It has bounced back to a certain extent, but let's talk about the earnings and what is expected. You've seen a revenue expectation of 2.6% growth. You see that it's expected to post a profit of 127 crore as compared with a huge loss, and that is on account of the provisioning that they had to make in the previous quarter. But more importantly, ARPU is seen more or less flat, Mayuresh, at 158.5, and their expectation or their aim is to take it much higher. Do you think that that's a possibility, and what are you looking forward to in the numbers?
Oh, so you're absolutely right. No two ways about it. ARPU is expected to remain flattish. Again, I think the low subscriber add in terms of new feature phone addition is something that might constrain the expansion in ARPUs that one probably looks at. The second element is the overall business and the competitive dynamics as well, Alex. So I think if the competitors are not going all out in terms of price hikes, I think Bharati itself will be constrained to hike its price quite significantly because there is a huge scope of churn that can happen within their existing portfolio as well. The subscription growth within the home subscribers and the broadband, the enterprise part of the business, should hold out pretty well. What has come out in terms of the pro forma numbers from the African business itself has held up pretty well, both in terms of the ARPU performance, in terms of the EBITDA performance as well. Again, I think the Supreme Court directive which has come through, they'll be able to manage quite reasonably without putting a lot of leverage onto their balance sheet at this point of time. But at some point, I think the ARPUs will have to go higher because that is something that the balance sheet will demand in terms of improvement of cash flows and so on and so forth. So coming back, like in the case of Tata Motors at O'Neill again, and as we say in the markets, bhav bhagwan che, I think the
Mm.
price is very, very important. It might be unfairly treated, Alex, but unless it shows improvement in price and the dynamics improve in terms of constructive action being taken on all these counts, I think the earnings growth in terms of EPS ratings and the price strength that is clearly required for Bharati, I think that will probably lag. So I think let it show some amount of strength, and then I think we'll be comfortable getting.
Absolutely. Well, thanks as always, Mayuresh, for joining me this morning and for sharing your
Thank you.
views. It's been an absolute pleasure.
Same.
Now, to you, dear viewers who've tuned in, thank you so much for joining in. As I said at the start, it could well be broad-based selling, but these are the stocks that we focused on in Stocks to Watch today. There's a lot more to talk about over the course of the day, so do stay tuned. This is Bloomberg Quint.